preliminary some miscellaneous expenses, they give it in P&L account. In adjustment they say miscellaneous expenses includes this some certain amount of money which is paid to a relative. This much is excessive or unreasonable. Only that excessive or unreasonable portion you need to add back to profit, having regard to the fair market value. If the fair market value is given and the cost of the service or cost of the expenditure is given, you need to compare those two. If there is any unreasonable or excessive, that excessive amount you need to add back to the profit while doing the computation. Understood?
Yes, sir.
Okay. This is 40A2. 40A3, many cases we have discussed. If any cash payment made to a person in a day which exceeds 10,000, otherwise than by specified modes, you need to add back the entire amount. Entire amount you need to add back. That means if you have paid 50,000 cash, entire 50,000 you need to add back. This one. Okay. There are certain exceptions. Certain exceptions in the sense, in Rule 6 TD, they mention even if you make a payment in cash with respect to certain transactions or certain to certain people, still it is not to be disallowed. It will not attract the disallowance. They are given few list. Okay. Out of this, I will tell you few. The other things, please glance through once. One is payment made to a bank. That means if you deposit the cash to the bank, there is no disallowance. When you make the payment to the insurance company, insurance premium, there is no disallowance attracts. But in section 36 we have seen employees insurance premium should be paid, otherwise than by specified mode it will be disallowed. That is the specific rule that will override this generic one. Okay, this is the one. First one is important. Second one, this one, payment in villages and towns having no banking facility, not having banking facility. In that case, whatever you make a payment to a agriculturalist or any other person who stays in village where there is no banking facility, such amount will not be disallowed even if it exceeds 10,000. Okay. Third one, this one very important. The payment was required to be made on a day on which banks were closed either on account of holiday or strike. On account of holiday or strike means there are few days it will be earmarked as government holiday. What are those? August 15th, January 26th, May 1st, December 25th. Any other days which is fixed holiday? October 2nd, Gandhi Jayanti. Any other day? It should be government holiday. I mean to say bank should not function on that day. Okay. On those days, if you make a payment in cash, that is not disallowed. Okay. This is with respect to 40A3. They are given few instances. Okay, you need to analyze whether this attracts the disallowance or not, depending upon the situation, and it differs from case to case. In this section 40, these are the main items you need to understand. This is very important. Disallowance with respect to expenditure claimed on provisional basis, but the payment has not been made within the due date of filing return of income. In case of a tax audit assessees, the due date of filing return of income is 31st October of every year. In case of non-tax audit assessees, it will be 31st July. Within that, if you have booked the expenditure on provisional basis and you haven't made the payment, the said amount which has been booked on provisional or accrual basis shall be added back to the profit. This is what it says. Okay, around 6 or 8 items are there. You have to understand what are all the items which falls under this section. First one, if you have claimed taxes on accrual basis, that means sales tax account debit to sales tax payable, but that payable has not been paid within due date, the said amount which has been debited to P&L account as sales tax will be added back to your profit. Duties, cess or fees. See here, this is with respect to tax, means it is only the sales tax. Income tax is always disallowed. Income tax will not comes. Duties means excise duty. It is also, when it is not paid, it will be disallowed. Okay. Next, bonus and commission to employees. What happens in organization, big organization, they announce the bonus middle of the year that you will get 10% bonus. They book the expenditure. Book the expenditure means account the expenditure. They close the books on 31st March. Even after that, the audit and everything takes place. After that also they will not pay within 31st October the whatever the bonus or commission which has been accounted as payable. In that case, whatever they have accounted as payable with respect to bonus and commission will be added back to the profit. Next year if they pay, they can deduct. They can claim the deduction of that. Okay. Third one, interest. You have taken a loan from the bank on which you need to make the interest payment. At the end of the year, you make a provisional entry. Provisional entry means payable entry. Interest account debit to interest payable account, and that interest portion will go and sit in your P&L account debit side, and you claim the deduction of that interest expenditure. But you fail to make the payment within 31st October. Hence, whatever the interest you have debited and you have claimed it as expenditure while preparing the P&L account, the same interest which has not been paid within the due date will be added back. Okay. Next, whatever the leave encashment which is payable to the employer will be added back if it is not paid within the due date. Any sum payable by employer, I said while discussing section 36, I specifically mentioned in case of employer contribution to provident fund and other funds, he has the privilege of making the payment within the due date of filing return of income. He makes the contribution to your PF account. If he doesn't pay the amount to PF department within the due date of filing return of income, then his contribution will be disallowed. Whereas in case of employee contribution, you will contribute to your PF account. Employer will deduct from your salary actually, and he should deposit the same to your PF account with the PF department. He fails to do that one within due date of the respective act. I said 15th of next month, within that date he has to deposit. If he doesn't deposit, then the contribution whatever the employee has done to his account will be treated as his income. Whose income? Employer's income. Whereas in case of employer contribution, he has got the time till the 31st October in case of tax audit assessees to make the payment of his contribution. Okay. Any sum payable by the assessee to the Indian Railways for use of railway asset, like freight charges for the railways. If you do not make the payment of the freight for the railways, which you have claimed it as expenditure while preparing your P&L account, the same thing will be added back to profit. This is nothing but disallowance is nothing but adding back to profit. Around 1, 2, 3, 4, 5, 6